What's going on, everybody? Welcome back to another episode of the Wisconsin Investor. I'm super excited for today. I've got Ben Keleny here with me, a fellow Door Countyan, but investing all over the place. So we're going to get into Ben's story here in just a minute. Before we do, though, guys, I got an exciting announcement. We are going to do a little giveaway for the audience coming up. So all of you guys that have been loyal listeners, we want to reward you guys with some giveaways. So I will talk a little bit about that before we wrap here today. So hang on to the end of today's episode so you can figure out how to get into this giveaway that we're doing. And we're going to do that New Year's, right around the New Year's timeframe. Kick off the new year with some giveaways from the Wisconsin Investor for you, our loyal listeners. So excited about that. Hang on to the end. With that, Ben, let's get right into it, man. Ben Keleny, how you doing, buddy?
Good, man. Doing well. Thanks so much for having me here.
Absolutely, dude. I'm excited to chat with you, dude. You got a lot of stuff going on. You've got a pretty wide background in real estate all across Wisconsin, it sounds like. So excited to get into that with you today. But when did you get started in real estate, Ben? And how did that first deal come around?
Sure. I mean, I guess the long story is my father had a rental property, coincidentally, Mifflin Street in Madison.
Oh, the old Block Party Street. Okay.
Yeah, exactly.
All right.
So that was a nice encouragement to get involved there. He bought a place there, and as a kid, he had us help kind of do some of the fixing up a little bit, if you will, on the place. And
okay, every May, I'm sure there was plenty of fixing up to do.
Oh yeah,
right?
Yeah, pretty much. We used to go down and we'd call it treasure hunting. You'd find all the stuff the kids would leave, and we ran, pick up random bikes and TVs and all sorts of cool stuff. Oh my goodness,
dude. That's awesome. Was that his only property?
It was.
Okay. Yep. Interesting. Yeah. I'm sure we could probably riff on that for a while, why he only had the one and why it was on Mifflin Street, but we'll keep her moving here. So you had him as your inspiration in your back, to get you kind of introduced to real estate. What a blessing that is, man, as a kid, right? Like opening your eyes to that.
Yeah, for sure. I mean, just not only for us as kids, we appreciated the tenants that he had down there. A little shout out to Mickey's Dairy Barn, one of the tenants worked there, so we'd go in like we were big shots, and they'd buy us breakfast occasionally. So
cool. Nice. That's awesome, dude. That's awesome.
Yeah.
So when did you get your first deal, and when did that, like, what was your motivation when you saw that? Like, how did that come about?
It kind of one of those things as a kid, right? You just do what seems to make sense or what your parents tell you to do, basically. But later on down the line, I did some mortgage work. I worked with one of the guys that I worked with was starting to do rental property, and then fast forward to probably about 2008, right around the lovely market crash that we saw. I was in the market to start rolling, so that was kind of my initial first thing. Houses were just so incredibly cheap at that point.
Oh my gosh!
You couldn't do bad if you were on the other side of the crash. Obviously, on the front side, you're doing bad. But if you're picking a house up for $30K, that's something that if you can make it livable, you're doing okay. So
yeah, you're gonna be just fine. So you had the timing. You're one of the rare guys that had the timing of the market work out for you, like, beautifully. Looking back now, I mean, that's got to be something to think about.
Oh, for sure. I mean, incredibly lucky with that. My wife's father was big into rental too, and that kind of helped. So we segue, into properties through him in La Crosse area, and that, he was a good helper, a good guide, and he really helped us get going with that. So that turned out to be a blessing for sure. So
that's awesome, dude. So was your first deal in La Crosse then?
Yep.
Okay. Awesome. So you still have it today?
I do. Yeah.
Okay.
My wife is a little too fond of it to let it go at this point. So it's just a long-term rental, and it's a nice house. So it's a cute little spot.
Okay. So is your wife involved in the business?
In limited spurts, right? As long as she has the patience for it, she does. But she's also a full-time teacher, so she doesn't really have too much time to play. But she really enjoys the designing aspects and the imagining, the fun parts of it, right? Figuring out how something's going to work, not actually doing the physical labor of making it work. So
yes, for sure. My wife is the same way. She's an amazing designer. All of our Airbnbs, she's done the design on, and I'm like, people always comment on how beautiful the spaces are, and she's definitely got a knack for it. I always joke, I don't even know how to color coordinate my clothes every day to get dressed, and
Yep.
let alone how am I going to do a freaking house? And
Yeah.
she's got that thing pretty dialed in. So it's nice to have that little the partnership, right? Where the strengths that I don't have, she's got.
Yeah, no, that's a blessing. She does lovely work for you, I'm sure. So
yeah. What does the portfolio look like today, Ben? What is that? You said you still got that long term in lacrosse. What markets are you in, and what does the total portfolio look like today?
Yeah, so it's kind of a varied portfolio, I guess, if you will. I've played the game different ways throughout the different years. But I've got my base portfolio in lacrosse is mostly long-term rental. We've got just a few short, mid-term type of places there too, just 2 places actually. But an assortment, single family houses, duplexes, and an occasional triplex over there. So that's kind of the base. The Sturgeon Bay area, I've got a mix of long-term and short-term here. As well as 2 boutique hotels, which are kind of a weird deal, but fun.
Yeah.
A little bit of stuff out of town, just looking at that new lovely property we picked up through you guys in Appleton. The old Korean church needs some love, but it'll be a really cool place. And then 2 Rivers, we've got a little bit of property there. And then the one only outlier outside of Wisconsin is South Carolina. We've got a place down in Valley Beach, which is crazy, but it's fun. It's a cool spot.
Do you guys use that as a short-term rental and then stay there kind of a thing, or is that what the play is?
Yep, exactly. Nice. So it's an old beach cottage. It's kind of a rougher house compared to a lot of what's around it, but for our purposes, it makes its money and gives us a place to land occasionally when it gets cold. So
yeah, that's awesome, dude. You and I are very similar. Both Door Countyans. We've got a place in Florida. We do the same thing. Like we get out of here usually. This year sadly, I don't think we're going to get there really at all this year. No, sad. I think we're going to do Europe for a few weeks.
Nice.
And that's going to take up. We got some other travel plan, and we do a team trip with our team here if we hit our goal. And I think we're going to hit the goal this year. So we're going to take our team on a trip somewhere. So it's like all that stuff going on, and our kids are getting older and they're into stuff now. So it's like a little bit harder to get them to want to go spend 4 months in Florida away from all their connections and friends and all that stuff, but we still have it. We've been doing more midterming with the house. We didn't rent it for a while, and now I'm like, well, if it's just gonna sit there, the investor in me I start tweaking. I'm like doing my neck scratches. I get some money coming in from this house. Like can't just let it sit there. Yeah. So
that's how I look at everything. The house we live in, I'm like, how can we make some more money? How maybe rent this out? We'll travel in the summer. Everything's an investment. It's not
exactly
the sentimental tie that some people have, but that's I guess a different mentality. So
that's right. I struggled. We had a boat. I just sold it this year. We had a boat, and the whole time I was like, "Gosh, this thing is just such a depreciating asset, and I can't make any money on it. Like, how could I rent this boat?" And I was like exploring all that out. Like, maybe I could get it to some of the rental companies up here, and they pay me a cut of it or something. I don't know. Never did figure it out, so I just sold it. But I don't like. I'll just rent a boat. Yeah, I'll just rent a boat if I want to take it out. So down in Florida, we're actually in a little boat club down there.
Nice.
So it's nice. Like again, I'm just wasting money this year because I can't be down there. But when we are down there, it's nice. You just go on the little app. You say like, okay, I want to take this boat out of this location. You hit the button. You show up. You get on the boat. They push you off. You come back. They pull you in. You get out of the boat. They clean it. You go. You don't have to do anything. No maintenance. I don't have to put a cover on. I don't have to do anything. It's so nice. So maybe I was spoiled maybe with that whole arrangement that I'm like, wait, I have to put my own cover on my boat. Oh,
yeah.
So spoiled. Yeah.
Clean it off.
Winterize. Ugh. Yeah. That could have been part of it, but well, that's cool, man. So do you guys get to go down there and use that place at all? Or is it like how often are you getting down to South Carolina?
We're usually down there. I'd say once a year is kind of what we try to do. Get down there, check in. I don't have as of right now, a local manager for it. So I kind of
Okay.
self-manage that
Okay.
with our other properties. So it's good. And I've got a maintenance and I've got a cleaning team down there, but nobody really cares like you're going to care, I guess, if you will. Or maybe that's
Yeah.
my Achilles heel on it, is that I try to micromanage. But
Yeah.
yeah, it's nice to go down. I do a little bit of work. We have a little fun. The kids go, play on the beach, and yeah.
Nice, dude. That's awesome. So total units now, going back to the mix of the portfolio, what does that look like? So of short terms / midterms versus long term, like total, how many units are we talking about?
You know, so long term, probably looking at this point close to 40.
Okay.
Short term, let's say looking about 25 units.
Okay.
So
Wow. That's awesome, dude. Are you self-managing all of these properties, or how are you handling the management piece of it? I know
you
you
know
talked about
what?
the South Carolina one there, but
Yeah, I and this is the good and the bad, right? This is what stops you from scaling, is that I do manage most of them. I do have a property manager that's her job, at least, to take care of the short term units. And
okay.
she's newer to the game, but she knows what she's doing pretty well, and she's picking up
Okay.
speed pretty fast on things. So
Okay.
the long term, I've had property managers. I just kind of had a friend doing it for a long time, and he stepped away to coincidentally pursue a business, a moving business. I owned a moving business that I sold to him, and then he kind of became
Ah.
too busy to take care of the rental properties. So that's how it goes.
Yeah.
But
Huh.
no, it's good, and it's something that at this point, as I slowly incorporate the different systems that are in place, the management systems, stuff like
Mhm.
that, it's a lot easier than it used to be.
I was,
Online payments and tenant
yeah.
reports and lease
Mhm.
signing. It's quick, it's easy. Not to say that
Yeah.
it's not a headache, but
Yeah.
it's a lot less than it used to be. So
Yeah, for sure. I've always been anti self-management myself, but like you said, in the last probably 5 years, I would say, Ben, would you agree? It's just like the technology's really stepped up and made it a lot more manageable to self-manage, it seems like.
uh,
Yeah.
yeah, I mean, it's just going to get even crazier. I'm trying to stay up with it, but it's something changes, something's new every day. I mean, there's
Yeah.
the customer service chatbots that are, we get inquiries from people about something or other with one of the vacation homes, and the
Oh,
software
sure.
we have for that, it's got one integrated, and it'll fire back to them right away. It'll give them an answer, you know,
Nice.
not always a good answer necessarily, but I'm sure going to get refined pretty quick here. And
Sure.
so,
Well, a lot of those websites, they want you responding right away to help the rankings, right? I mean, that's something
yeah.
that they look at to get you higher up in the ranks. Is how responsive you are as a host. So that speed to that response is an important factor, right?
Oh, for sure, for sure. And people want a personal touch too, but
Mm-hmm.
just having somebody respond, I feel like that's nowadays it's a instant gratification world. If somebody
For
leaves
sure.
you hanging, you're like, what's going on? Our
Yeah.
our patience level has gone down
It,
incredibly. So
100%.
having an autoresponder with a little bit more intelligence is huge. So
Yeah. What are you using for us management software for the short terms?
OwnerRes. I had
Okay.
OwnerRes right now. Before, I had tried a couple other ones and landed on OwnerRes, just with the customer service of it. Puts that website out for you. Most of them are pretty relatively similar.
Okay.
The calendar integration is pretty good. The payment processing, all that stuff is pretty easy. So
Nice. Yeah, we're just in the process of getting set up with Guesty for pros. We were on Guesty for
okay,
hosts for a long time. It used to be called Your Porter. And Guesty bought it, but like it was like the redheaded stepchild of Guesty, so there was like zero support whatsoever. And
yeah,
so like we'd have like VRBO would break all the time, like integration, and then there's just like nobody to help it. VRBO would be like, oh no, it's Guesty. Guesty like 3 days later would email you back, oh no, it's VRBO's, and you're like, oh my gosh, we're losing
yeah,
how much money right now because of this integration system. So
yeah.
we're going through the painful process of integrating a new or setting up a new system, but I think it'll be really good in the long run for us.
Uh,
And we're probably missing a lot of dollars by not being on something a little more professional. than what we
Sure.
were on. So
Well, I think Guesty, maybe not. I'm pretty sure they also have some sort of an AI chatbot too integrated, and then the dynamic pricing and all that type of stuff. So
yeah, they have a lot of cool tools. That's the other overwhelming part though. So I'm like, you and I were talking a little bit before this, as you start getting into all these different types of real estate, right? You've got long term, you've got short term, you've got flips, you've got commercial stuff, multifamily, storage. Like there's never ending. If you want to grow, if you're growth minded, real estate's a great place to just never stop growing because you can always learn something new or whatever. But it also can, as we were talking about, kind of can start to stretch you a little bit thin on certain things, right?
yeah, oh yeah,
Yeah.
no, and that's it. A lot of the guys say, pick one thing and do it well, right? Instead of
Yeah.
pick five and do them all okay.
Yeah.
It'll inhibit your growth a little, but
Yeah. Yeah. Have you experienced that in what you've done? Did you start with just focusing on the long terms, or have you kind of been like me, like a little bit of squirrel brain and a little bit all over the place?
yeah, always looking for the opportunity in it, I guess. Just kind of
Okay.
learning a lot as I've gone with it. I did flips for a while. It's being the time that it was when we started buying, the foreclosure game was kind of
Mm,
the way in. So the uglier the better at that point. We were buying them for dirt cheap, and they were just in rough shape, but
yeah.
nobody wanted to touch them. But if you can buy a place for 20, 30, cost was way lower then, and
Yeah.
yeah, I learned a lot of skills, so that was good.
I bet. I bet. Nowadays, what is the strategy for you in today's market, Ben? I mean, things I feel like have shifted a little bit here this fall. We're
Yep.
seeing the markets maybe changing a little bit. Anything you're seeing here that you're pivoting to, or that it sounds like you're an opportunistic investor, which is really cool. Like whatever the market's giving you, sounds like you're gonna go attack that and capitalize on it, which is kind of nice that you can be that nimble, right? But what are you seeing? Anything you're seeing as you're going into 2026 here that you're kind of eyeing up as maybe opportunities?
Yeah. That midterm, I think, is really a good space to be. Um, long term is always going to be a stable. You're not going to get rich on it in the short term, but
Mm-hmm.
long term rental, you'll build appreciation regardless. Market goes up or down, you're gonna,
Mm-hmm.
eventually be up there if you hold on long enough and take care of the asset. So
Mm-hmm.
I think the short-term market, unless you have a unique property, which, I mean, we're in Door County, so there it's a little insulated in the game, but I think we're hitting a point where it's saturated. So your
Mm-hmm.
average house isn't going to necessarily make the money or balance out to what it would have, a few years ago versus
Yeah.
long-term or mid-term renting it. So especially for
Yeah.
the extra headache and hassle of doing short-term, it's,
Yeah.
you know,
Yeah.
um, other than that, I'm kind of leaning into looking at some more multifamily potential.
Okay.
Possibly even building a bigger multiplex, but that's always something in the works. If you're not
Yeah.
if you're not busy or have something going on, then you get bored. So
That's right. That's right. Yeah, we've seen that with all of our whole short-term rental portfolio. After COVID, it was like, man, or during COVID, you could just put a turd out there on
hmm
Airbnb or VRBO and you'd be booked up with some crazy average daily nights and stuff like that. And then it was like everybody threw their houses up and just
yeah,
oversaturated the crap out of it. And so we've
yeah,
started to add like we started to get the hot tubs going, starting to add some of the other extra amenities, arcade machines, like all that kind of stuff to try to stand out from everybody else to keep the bookings up and all that work. And 3 years ago, you didn't have to do any of that. You could just have a nice bed and place for people to sleep, and they were tickled pink. Uh,
yeah, oh yeah,
but it's become a lot more competitive in the last couple of years in the short term game.
yep,
So yeah.
yeah.
So go
I
ahead.
was just gonna say, what improvements or tips do you have for me then, adding on the short term? What's seen the best return for your buck? What's, you know what I
I mean,
mean?
we just threw hot tubs in 4 of our Wisconsin properties. I had Tyler Cabot on one of the episodes probably 3, 4, 5 months ago, maybe. And he runs a short-term rental management company out of Appleton. And that was one of the things he talked about on that episode was hot tubs. So I took action on it. I'm like, all right, I'm getting some hot
Yeah.
tubs, you know?
Yeah.
And so it took forever to get them though, and then to get them installed. And I will say this, so far, they've been kind of a pain in the butt. We have one down in our Florida place too. And people book specifically for the hot tub, which is great.
Mm-hmm.
Like awesome. We're
Mm-hmm.
getting like off-season bookings right now because of the hot tub. However, when the hot tub doesn't work, now you're in a bit of a pickle, right?
Yeah.
And so we've already had, a circuit board go out on one of them, and then down in Florida, the heat pump is out, and people, it messes with that guest experience a little bit when they're coming there expecting to get in a hot tub, and you can't give them that hot tub. So we're learning. It's new. It's helping obviously get bookings. Like one guy specifically said he booked because of the hot tub. Like he searched specifically for hot tubs and boom, booked for that. So that was one thing. Another thing is we hired a guy in the summer. Sounds similar to the person you were talking about that you've got trying to help you with the property management piece of things. And he was a fresh guy out of college. We didn't really have a good role for him. We were just like, hey, come in here and help us make more money on short terms. Like, didn't really give him any training or anything. We're just like, figure it out. We're busy.
Yeah.
We're doing a million things, right? Like, figure it out.
Throw them to the wolves.
Threw him to the wolves. And, I don't know that was the right thing to do. We a couple months later, we just, decided it probably wasn't a good fit for either of us. And we hired a third party revenue management company. Sure. And they've been so far pretty good. Like they're in every day messing around with, price labs and playing with putting different promotions out and doing all these different things to try to get the bookings up there. And so far we're seeing some results with that as well. So those two things are pretty new, but we're already seeing some movement from what we were experiencing before from adding those two things in. So,
nice.
That's it.
Yeah. No, I mean the hot tub, I feel like you can open up, especially since we don't really have ice fishing anymore. It opens up a little bit more winter travel. So
yeah. So talk about that church a little bit, Ben. So you bought a church from us.
Yeah. You guys, and just plugging you guys. It's even right now, what's going on today. There's a couple waterfront places. I'm like, man, if I wasn't already spreading myself out a little too much with the projects, I'd probably jump on a couple more. But yeah, you guys come across some great projects, and but
awesome, man. Awesome.
The church.
What's the plan with the church, man? So you're buying it. So if everybody knows, Ben bought a church from us. We had a church out there for a while on our buyers list. And the sellers of this church, it kept going, and they kept saying, well, we could lower the price. So we kept putting it back out and lowering the price. And finally, Ben, it was just too tempting for you, man. You had to bite on the apple, dude. So you took it on. What's the plan? What are you going to do with this thing?
Yeah. So for anybody, I guess, that wants the full context of it, it's an old Korean church. And that being said, if anybody's looking for any sort of Korean Bibles and church stuff, things like that, find me on the internet. I'll give them to you.
Okay.
You can have it all. So
okay.
We've been spreading that out, but it'd be good to find somebody who'd actually appreciate that.
We have a pretty strong Korean following on the Wisconsin Investor Podcast.
Nice. You never
know. No, I never know. We'll find out, I guess, after this if we do or not.
Yep. But yeah, it's a really neat project, and just like anything with investing, right? You've got to be able to see the future potential through see the diamond through the turd, if you will.
Yeah.
It had some water damage, and so first we're kind of addressing that. They did a lot of updates on their own, and at some point I think it had a freezing on the top level. Water worked its way down to the basement. Nobody was really around. So I think that scared off a lot of people, but that's opportunity. You know what I mean? That's how I see it, I guess. And then, So with that, we'll probably do some updating, making it more of a living space, with the potential for keeping it a church, keeping it kind of like an event space. It's got a really nice big kitchen area. We'll turn that into a beautiful kitchen with an open up bar type of area. It's got like the old school windows that from the kitchen to like the main hall is there. So like it lends itself to a lot of cool options with that.
That's awesome, dude. So take us through the decision of that. And let's break this church down a little bit, right? So you see the thing come through, What's going through your head? Are you right away like, man, I think we could do something really cool with this, and then you start diving into some numbers, or like, what's your process when you see something like this come through?
Yeah, I mean, so like any project, right? You've got to have an idea. Here's what my numbers are coming in, and you've talked about this, a bit before too. But
Hmm.
look at it and say, okay, well, for me, my options being I'll do short term, I'll do long term, or I'll flip. Less into flipping nowadays. Just if I can afford to hold it, I'd rather hold it for the long
Okay.
term and make something out of it one way or another.
Yep.
But I'll look at something as either the 1% rule,
Okay.
where you'd say, okay, if I'm going to end up sticking, we're buying it for X. If I stick another, let's say I'm all into it for 200,000, I need to be able to at least get, and this is on a long-term type of basis,
Yep.
$2,000 a month for it. So I need to be able to
Hmm.
get 1% each month, and then I know it'll make money. Not
Yep.
maybe a ton, but it'll make money and appreciate and grow. So
Yeah.
I don't know the short term market as well in Appleton, so I kind of
Okay.
did a little research, and it's there. It's not quite the market that we're blessed with up in Door County.
Sure.
But Appleton's awesome. I mean, it's a great
Yeah.
place to be. It's a growing city. It's got so much going on. Lawrence University. So you look at it as a short term, and I lean to the 1.5%. Basically,
Okay.
I'll say let's say if we're into it for 200,000, I
Hmm.
need to be able to make $3,000 a month, or at least be
Okay.
bringing in 3,000 a month for short term. Your added
Okay.
expenses, your cleaning. I mean,
Oh
you
yeah.
understand the game, but for people that don't, there's a lot more involved. You have to pay a
Hmm.
lot of taxes. You're doing linens. You're furnishing a place. You're
Yep.
taking care of the upkeep. Uh, but then it lends itself to midterm too. So
Okay. Nice.
coincidentally, we work with a guy who finds a lot of corporate housing for people. So
Okay.
he's like, well, there's always, we do a bit down in Appleton, and there's a need for, they'll find housing for like the timber rattlers, or for
Oh,
people coming
sure.
for hospital terms or anything like that. But
Yeah.
um so you kind of have to break it down like that. What's my default?
Yeah.
And from there you can at least work, and that's kind of what we're doing. We're setting it up to be housing basically potential on it. In the meantime, I have reached out to a couple of realtors and things like that and say, hey, if you have any tenants, we'd be happy to kind of build to suit. uh,
Mm.
it's lovely if we could have somebody who'd say, hey, yeah, I'd love the space for X amount a month. You make it work
Yeah.
for us. We'll sign a lease and throw a ton of money down. So,
That's awesome, dude. So you have a lot of
re-
options with this one, it sounds like. I mean, we always talk about having multiple exit strategies with properties, right? And it sounds like you've got like three or four here: short term, midterm. You've got the event idea here. You could build the suit and lease that way. I mean, so there's a lot of opportunity here, right? And so
yeah, yeah.
was that all part of the decision when you were going into this, Ben, or was this something that some of these have developed since you've kind of gotten into the project?
A little bit developed getting into it. Like you said, kind of it was a great deal. I think it's something that we just couldn't pass up on. So it wasn't
Yeah.
something that I was directly looking for. But you have to be open to opportunity, whatever that looks like nowadays. It's a different market. I mean,
Hmm.
I thought it was going to start dipping back down, but now we're talking about 50-year mortgages at a 3% rate and things like that. So
Yeah.
I can only imagine if that ends up being something that happens, the prices are just going to keep going up. So
I know. I know.
I mean,
Everything I'm hearing is like doomsday, right? Like we're in like the world's going to end, the economy's going to crash. But then there's, like you said, okay, now there's this 50-year mortgage, or the portable mortgage is the other one that's come out, right? And I'm like, dang, if that happens, for those of us that own real estate, like, well, there goes our net worth. Like it just keeps going up at that
yeah,
point. Like,
yeah,
sucks to get into it now sometimes, right? But
yeah.
I do know this too, Ben. Kind of along that line, to make that point, you're talking about like what I noticed with you is you're just going wherever the opportunity is, and I think
A
that's
little
that's
bit. Yep.
that's that's a strength I think that you have that other investors I think get very rigid and hey, this worked for me back in 2020. I'm going to just stick with this. for the next 5 years. And now they've bought way less. They've done way less deals maybe because they're very rigid on what they're looking for, what their criteria is. And it sounds like you're pivoting as the market is changing.
Yeah. Yeah. Well, and I mean, that's it. It's a different market to find property in. I've never been afraid to drive around, see an ugly house, find the owner's details and give them a call and say, hey, are you interested in selling, and get the FU, or get yeah, potentially, like, what are you offering? And, but there's less and less of that. And a company like yours, I mean, I'm signed up for a couple other wholesale emails that I get around the state, and you guys are top notch. So can't speak highly enough to that.
Let's go. Ben, you're automatically entered in this giveaway I'm going to talk about at the end.
Nice.
Just for that little comment there. That's what we're doing.
Yeah. But it's tough. It's one of those things. I put out a little bit of content, but the next generation, I think they're really going to have to get creative. They're going to have to find different ways if they want to get into real estate, or say it's not feasible, which is sadly a little bit true for some. But that's maybe where syndication comes into play. If somebody says, well, I can at least invest in real estate and see that appreciation and see a slight return on something just to diversify. But yeah, no, opportunistic, back to your original thing there. If you can stay open to it, it'll usually benefit you if you stay on it. Right. I've definitely lost on a couple deals and gotten in over my head a few times, and, done work that I shouldn't have. That's why I'm now a licensed contractor, because sometimes you got to try to do it all yourself. And if you can't, you'll need a lot of those contractor resources. So
for sure,
like you've talked about a little bit, that's huge.
Yeah, for sure. That's a huge advantage, I think, that you have right there too, and being competitive in this market. Right. So we just did, at our REI success meeting on Tuesday, Reese from our company just did an amazing, event, and we're hoping that some other REIAs around the state will want him to come in and do this as well, because it was really impactful. He built a crazy awesome calculator, and then we went through a sample deal that actually went through our process, and my brother was the winning bidder on this one, and so he broke down some of his rehab and numbers and stuff. But we had everybody at their tables go through and look at the inspection report, watch the video, come up with their rehab budget, what's their max offer going to be. And Reese made it so easy with this calculator. But what was interesting is he had everybody put in what they wanted to make on the deal, and then it spits out what your max offer can be based on that. And some people change their offer, even though, like, they say they want to make $20,000 on this flip, right? They would change their offer because the minimum suggested offer was way lower than what their offer calculator was telling them to do.
Okay.
And so they were like, they got emotional about the difference between what the calculator was saying and what the minimum suggested was. And they would lose the deal. Like, we had one on their table, that won the deal, quote unquote, because they had the highest offer on the property. And it was interesting to see the psychology of that, of like how we get caught up sometimes in emotions with these things. And with like, well, again, kind of going back to my original point, this is what I did in 2020 and this is what worked for me. Well, that might not work for you in today's market. The days of getting 50 grand, 60 grand pops pretty easily on some of these flips. Not saying it can't happen, because it definitely it can and it will happen, but it's a lot more rare these days. And if you're really firm, like, man, I just need to make $20,000 on a flip and I'm tickled pink, and you're pretty confident in those rehab numbers and your ARVs, you can still be very competitive in today's landscape with putting offers in either on MLS or through, wholesalers or whatever the case is. But if you start getting greedy, I think that's where, 100% of zero is zero, right, Ben? So you can say you want to make $50,000, but if you don't have a deal to make $50,000 on, you ain't making anything.
No, exactly. And that's it. I mean, and you can wait for the perfect deal, but the perfect deal is often not going to happen, right? You got to sometimes just say, hey, this is going to work, or this maybe wasn't in the area, or this wasn't the ideal property I was looking for. But, I guess it's your capacity for paying a little bit on some of that stuff. If you're ending up with something that you weren't exactly imagining, but for some people they stick to their lane, and that's great. If it works out, then more power to them.
Yep, for sure. I want to pivot real quick, Ben, because you've done all kinds of different things here now. financing wise, how are you financing the properties in today's landscape? Are you utilizing the BRRRR strategy, and are you using commercial lenders, hard money, private money, your own cash, lines of credit? Like, let's talk a little bit about some of the tools and the financial tool belt for you.
Sure, sure. Yeah, and kind of like you've spoke about before, that the BRRRR method is something that I've done a fair bit of. Um, you know, especially with those foreclosures, you could build so much equity
Oh my gosh,
so
yeah.
so quick on it, and turn around and use that equity on the next project. So,
Mm-hmm.
um, it's for people that don't know, it's essentially you build that extra cash, and you take that cash out to roll into your next project, and you kind of keep rolling. If you find some place that's not livable, you make it livable, you get that rent, you get the bank to loan you on that new value. But yeah, so I did that for a fair bit of time,
Okay.
a fair bit of BRRRR method. And then I, kind of keep a line of credit for if there's anything that's, last minute. You got to be ready to mobilize. You got to be ready for a deal if you can. And that's not everybody, right?
Right.
I've been doing it for long enough where I'm lucky with that. And sometimes it's easy to get, sometimes it's not, it's,
Mm-hmm. Mm-hmm.
I kind of kept a rolling line of credit too on a couple places, and the banks started to get a little bit stricter on what you could do with it, and then they wanted to have control over how you're spending it. So you I've pivoted a little bit, and then
Okay.
with some of the recent projects, I've just started to work with some outside investors.
Okay.
um, People saying, okay, well, I'd like to get my skin in the game, but I don't want to have to do the work, I don't want to have to deal with
Mm-hmm.
the tenants, but I'll take a return on whatever that looks like. So,
Yeah. Yeah.
um, not so far as to work with a full on syndication type of deal, but
Okay.
um,
Just bringing them in
yeah,
on like a note and a mortgage and giving them
yep.
are you paying them at the end of it? Like, are you refinancing them out of it? Are they in it for the long term with you on these deals? What's the arrangement on these
I've
things?
done a little where it's just a flip plan where
Okay.
we're looking at either, selling the place or refinancing after, let's say 2 years or whatever the term will be. I've done
Okay.
that a little, and then I've got an investor that just says, keep me in, build the equity, build the return. We're just hanging in there. I need the write-offs for my regular income. So yeah, that's a good place to be if you're that person. That's awesome. So you're
Yeah.
doing well for yourself outside of real estate, and you can say, this will help me balance out my other income.
So on
Um,
that one, did you create a separate LLC with that person so that they're actually an owner then?
yep,
Not
yep,
just a lender? Okay, cool. That's a
yep, yep.
strategy. I think, like, as you're saying that, I'm like, man, I should start thinking about that myself with raising private money on some bigger deals.
Mm-hmm.
Um, sometimes what investors want, they'll take a lower rate of return in exchange for a bigger chunk of the depreciation, right? And you can set that up in your operating agreement when you're doing this with your attorneys. So for those of you guys out there that don't know, the depreciation is going to show up as a loss on your tax returns. And depending on your IRS tax status, if you're a quote unquote real estate professional or you're just a regular person, I guess, out there, will determine what income you can write off. But let's say somebody like what Ben's talking about has a lot of, say, stock dividend investments or things like that, and they're making a lot of passive income. Even if they're not doing real estate full time, they can still use that depreciation to offset those dividends or those passive income things that they're making, and wipe that out from having to pay any tax on that stuff, which is pretty awesome. And they get to get involved in an appreciating asset that's still kicking them off a return. So it's like they're almost double dipping in a way, like not tipping the IRS, as we say, right? Keep
Yeah.
that money out of the IRS's pocket if you can, and you're getting the upside on a real estate investment on the other side. So you're giving that person an opportunity, which is amazing, right? It's a good win-win, it sounds like.
Oh, for sure, for sure. And yeah, when everybody can benefit from it, it's a good deal. So that's definitely a nice thing.
Yeah, that's awesome. Another thing we just had on Mikey from Specialized Trust Company. This is another untapped thing that I think I always forget about too. So having Mikey on for me was like a good reminder. There's so much money sitting in people's retirement accounts and IRAs and 401ks, and they don't know that they can even self-direct that. And basically what self-direct means is they can roll it into a self-directed custodian, like specialized IRA. So it's not a pull-out. They're not pulling it out and paying the penalties, but they can roll that money and then they can quote unquote self-direct it, meaning they can say, I'm going to invest it in what I want to invest it in, real estate being one of those things. And they can give you that money, Ben, and then you can go do projects with their retirement accounts that are probably for them, just like, oh, I kind of forget I have it type money, right? So it's not even like personal cash. I mean, now you can go lend out this IRA money for them. They're going to get a nice, steady return, right? And safe. It's secured against real estate. They're insured on it and all that kind of stuff. And it's not just, I don't know where I'm investing this and who knows where land, right? Some stocks that I have no clue what's happening with, right? And now they can control that retirement income a little bit better.
Oh, so that's people just self-directing their trusts, huh?
Yeah, just just IRAs, 401ks, all that stuff. They're just rolling them into self-directed accounts and then lending that out.
Look into that.
Yeah,
I have to watch that episode. We'll see.
Yeah, I mean, there's literally trillions of dollars sitting on the sidelines in retirement accounts right now, and people forget about it. They're like, oh yeah, I got this IRA. I don't know, makes whatever. I don't really pay attention to it. I can't touch it until I'm 59 and a half anyway, so why worry about it, right? It's like, well, you could self-direct that. And if it's a Roth, now it's all tax-free gain that they're making in their retirement account.
Yeah, there you go. Yep.
So they can partner with somebody like you, Ben, and you're going to go put their money to work for them. And they get to just make sure it's in a nice, stable asset. And they don't have to worry about the fluctuations of the stock market and who tweeted what today or whatever. It's very secure, very safe. And if they know, like, and trust you and you're a decent guy, you're going to make sure they get paid back. So that's what they're investing in you in a way, right? In that relationship. But it's a good way to tap into people's private money that they don't even realize they have. It's almost like found money for them. Like, oh yeah, I do have an IRA. Forgot about that. And, you can self-direct that and I can put it to work for you. Let's do it.
Oh, that's smart.
Yeah.
Smart aspect or way to roll if you can, tap into that for sure.
Mm-hmm. Yeah, for sure. So I think that's really important. You mentioned, a couple different ways you're financing it. For those people out there that don't know about the BRRRR strategy, we have a course called BRRRR for Beginners that we give away. If you want a piece of that, just get on our buyers list and have a conversation with Connor from our team. Tell him you want the BRRRR course and he'll hook you up with that. But BRRRR stands for Buy, Rehab, Rent, Refinance. And we've got several episodes on the BRRRR strategy, so I'm not going to get into the meat and potatoes of all that. But it's a great way to recycle capital, and you don't need a lot of money to get started. And you can build a portfolio relatively quickly. Like I went from 0 to 100 units in 3 years with like $8,000 in my bank account when I started. So I didn't have any extra capital. I raised some private money from some IRAs and some other stuff. But other than that, I utilized the BRRRR strategy and just kept recycling those same funds to get to 100 units in a relatively short period of time. So it's my favorite strategy. If anybody who listens to this podcast, you probably know that by now. Talk about it on every episode, but it's cool that you're using it too with some lines of credit and you're pairing up some different things, private money, lines of credit, all those types of things. Are you using commercial financing at all, like community banks, commercial financing?
Not currently, no. I've explored it a little bit, but haven't gone down that route yet. So
okay, cool.
But yeah, I know you guys talk about, I don't know if Johnson Bank, right?
I use Johnson primarily for HELOCs, home equity lines of credit on my personal residence. So they have I can't find anybody that can beat their terms and what they'll do. And I haven't had to get one now for a little while, but 90% loan to value. So on your personal residence, which is pretty awesome. Mm-hmm. And no closing costs. So it doesn't really cost you anything to get it. And I think you have to do like a $250 checking account or something with them. Sure. Just have a little bit of deposit account with them. But they were doing, when rates were like 8.5% on lines of credit, they were doing it. They've got me locked in at 6.5%.
Oh, nice.
So I've taken some of that money and I've actually put it into some real estate investing funds at 10% return. And I'm making about a 3.5% spread on what my line of credit is doing. Otherwise, it's just dead money sitting in my house, right? So I'm like, I might as well utilize this capital.
Oh, that's smart.
Yeah. Yeah.
It's a
And then,
good way to do it. Keep it rolling, keep building that wealth on it. So
yeah. And then there's a bunch of community banks we work with. We have a big lender list right on our website. So,
mhm.
um, I always talk about, Ben, like all kinds of having different buckets of money, right? So it sounds like you've got several buckets of money over there. You've got some lines of credit, you've got private lenders, you've got your cash, right? You've got some of those different things that you're utilizing. And that's awesome. And the more of those, I think, for investors out there listening that you can have access to, the better chance you're going to be able to, like you said, you're going to use those lines of credit sometimes to strike quick, right? Oh, I got a smoking deal here. I got to jump on this right now. I don't have time to go get a commercial loan on this thing. I got to give a pretty competitive offer of cash, right? And boom, I'm
Mhm.
going to go use this. Now you get some sweet deals just by having that line of credit because you can close quick, right?
Yeah, well,
It's awesome.
no, for sure. And one thing, you and I are kind of on the similar path on things a little, but I know for a lot of people that are just getting into it,
Mm-hmm.
and if they don't have much of anything, kind of along those same trust ideas, if they, have relatives or have, somebody they know that owns a property that doesn't utilize it or would rather not sell it and take all those gains from a second home or a third home.
Mm-hmm.
That's kind of another way I see potentially for younger people to get involved is to go and see if the seller will do the seller finance, just set up a payment term. I know that's
Mm-hmm.
getting a little more popular with people saying, "Well, I can't get a new mortgage on a place for this, but I can't get out of my current mortgage because the rates are so low." So,
Right.
there's opportunity. I think you kind of spoke about that a little bit before, and some
Yeah.
of that angle for them. But yeah, for a newer for a first time investor, I mean, you've got to get a little creative, especially if you don't have money or you don't have the option to finance through a bank. I think
For
there's going
sure.
to be some growth there too, especially as people age out of this house or that house and they want to go live in Florida part time. They'll rent a condo or whatever down there, but you
Yeah.
say, hey, maybe I can buy that house from you.
Exactly. Yep. And I think, look, what you mentioned there, Ben, a good point for those people out there that are just trying to get into the game. Sometimes if you don't have access to some of this stuff, like what Ben's talking about here, you're gonna have to hustle and grind a little bit on the front end, right? And I think, Ben, you and I
Yeah,
probably both had to do some of that, right? When we started out, it's a lot of hustle, a lot of grind until you can get to a point where you've got a lot of these different tools you can use, and you don't have to. Maybe now you don't have to hustle and grind as much, right? I talk about, like, you get in and do a lot of the work on the stuff. I have soft office hands, so I'm not getting in
it's
doing
good.
any do any physical labor in there.
Yeah, that's a
Uh,
smart way to do it. That's a
well,
smart way. But yeah,
but
anymore
there's
I'm
pros and
playing on my
cons.
phone. And,
Yeah,
yeah,
there's pros and cons, right? So, like, you're going to have probably a lot more equity in these properties than I would. My margins are going to be tighter. I got to be more disciplined on the numbers on the front end, all those sort of things, where you're probably able to get more deals because you can get in and do the work. So you've got an advantage on that end of things, right?
yeah. I mean, yes and no, right? Like that's the Achilles heel of it is the scalability. Then becomes it's waiting on me. Then
Mm-hmm.
it's if I'm the hinge point of getting this place from unlivable to livable, then it's I'm not going to do three other projects at the same time. I can only what I mean. That's
Yeah.
I'm the holdup, and I've got other guys that work for me and maintenance people, but often I like to have my hands in things because it's fun. I
Yeah.
enjoy the building side of things a little bit more than I should, but
Yeah.
yeah, it's
Yeah.
you got to either lean into it and say, okay, there's some aspects of this that I like and that I really enjoy, and find what those are, I guess. And yeah, but I see the missed opportunity so often, right?
Yeah.
Like I said, you guys have great deals out there today where I'm like, geez, a couple on the water, that's an easy enough flip into an Airbnb. Like,
Yeah.
just would need somebody to get up there and to get that fixed. And given it's not always going to be like that, you're not
Right.
but you have to be open to those opportunities. That's where I slow it up because
Yeah.
I think we're closing on one from you guys. We closed yesterday technically, but it goes through today, and that one's going to need a lot of work, and that'll be a cool project. But because of that, I'm like, I can't jump on this other one. I should finish that first. I'm not going to be able to spread too thin. So
Yeah. I suppose you got to be more disciplined on just that exact aspect of like, okay, I really want this shiny object over here and I think I can make it,
hmm
I can shine it up even better, but I got to be disciplined and know my capacity, right?
yeah. I mean, and that's it, and if I want to take trips or if I want to do things like that, I need to really make sure I have it planned out, laid out well enough to keep progress moving. Otherwise,
Yeah.
things maintain, but they don't necessarily advance, right? You can't move on to the next project or find the next two if you're stuck on the last two. So
Yeah. Yeah. So what does the future look like for you, Ben, as we start to wrap here? I mean, is that in your plans in the future, starting to build a team that you can then scale, or do you think you're just gonna you enjoy the building piece of it and the getting dirty piece of it more so than
yeah,
it's important for you to scale?
no, I think I'm really getting to that point where I know I need more team players to, and you've done an awesome job. I mean, you have a great team of people that seem to run the ship real well. I mean,
Hmm.
I don't know fully what your involvement is and everything, but it, that's smart. You're doing
Hmm.
smart things by putting the people in place to take care of the stuff, to give you more time to do what you do. And
Hmm.
I think that's the goal, right? Like
Yeah.
that's more freedom is kind of the end goal on things. And as long as you can afford, or at least as long as I can afford to slowly put the people to do more of the updates, to do more of the work there, and as well as to just manage things. I mean, I think you're going to
Hmm.
have AI can take care of coordinating with maintenance people, with project ordering, with all the different things like that. But
Yeah.
you still need people to run the AI, if you will. So
Yeah, for sure. Well, and it's that AI is great, but it's implementing AI I'm finding is like the challenge, right? Either like AI's got so many awesome tools and so many things you can do with it, but then also it's like you almost need a full-time person just to implement the stuff that you want to implement, right? Like it's almost more
yeah,
work. It's almost more work that like ChatGPT is easy enough to use for what it can do. But then,
yeah,
some of the things, I don't know. I actually was just talking to another investor the other day, Ben, as we wrap here. As a little tip. I'm trying to get his prompts for this, but he was telling me how he's been using ChatGPT to do renderings of his flips. So he'll take pictures of the outside and the inside, and then he has
okay,
some prompt that he's plugging into ChatGPT to have ChatGPT give him like what it would look like if they did the flip with this sort of budget. Here's my budget.
wow,
Then it'll take it a step further and get the SKUs that he needs to order to make that flip happen. So
wow, that's
I
next
was
level right
I was
there.
like, dang, bro. I was like, send me that over, dude. So if I get that, I'll send that to you, Ben. I'll send over the prompts for you for your flips, and
Yeah,
maybe we'll make that a giveaway here as well for the audience. If they want that, they can maybe hit me up, and if I get it, I'll put it in a little document for everybody that
yeah.
we'll share.
No,
So
I did something a little similar. We've got a project. I'm just doing the GC for like a temporary housing local community Habitat for Humanity deal.
cool.
And we sketched up just, the old school, put it on paper. Here's the layout. Here's what the layout's going to look like. Took a picture of it. I think I used Gemini for that one, but said, make this look more professional, right? Modify
Yeah.
this, change this. And it did pretty good. It made it look like a nicer, more submittable workup to bring to get the permit, to move things ahead.
Oh,
So,
that's awesome, dude. Yeah, there's a lot of
yeah,
great uses for it, and it keeps evolving. And like, just every time I talk to investors about, it, there's some other cool idea that people are doing like that. Like, I'm like, oh, that's a great way to do it. So, man,
yeah,
this has been awesome, Ben. I know you probably got a bunch of projects to get to because you're closing on a deal. You better get to work here, right? So we
yeah,
better get you off
yeah.
this podcast and get you rolling. Before we wrap, though, I want to talk about guys for the audience out there listening again as a give back to you guys and helping us grow the audience. We want to do a little giveaway here. Okay. So this is something we're going to do on I think it's January 1st on YouTube. So we really want to grow that YouTube audience and we want to give back to you guys that are helping us grow that YouTube audience. So here's what we are going to do. I have to pull up the details here, Ben, because this is all new, man. Okay. So we got 3 giveaways, guys. All right. So we're going to do a one-on-one strategy call with me for an hour. That is one of the options. All right. Another option you can choose from is there's going to be a $250 Amazon or Visa gift card that we're going to give away. And the third option is we're going to give a little Wisconsin investor a little merch bundle out. So we're going to get some merch in there. We're going to do some books that have been instrumental for us in growing growing our business and growing ourselves. So we're excited about that. Okay, so how do you qualify for this? All right, what you need to do is you got to subscribe to the YouTube channel. That's number one. Okay, we're going to do a giveaway video on there. So you're going to comment on that giveaway video. All right. And then you're going to follow us on Instagram and I think TikTok. Don't quote me on that. But if you do those things and you comment on the YouTube giveaway, you will be entered in for one of these prizes at the end of the year. So we want to share, we want to grow. So subscribe, share, and tell some folks about the podcast and comment in the video. And then you're entered in. Easy peasy. Right? Pretty cool. Ben, are you subscribed?
I think so, man. I think I jumped on recently and got subscribed. So perfect. I know I was watching a few of the videos for sure. So
awesome, dude. Awesome. So if you guys are listening to this on Spotify or Apple or whatever, head over to YouTube, get entered into the contest, and we're excited to hopefully grow this YouTube audience and give back to you guys, our loyal listeners. So Ben, any final words for the audience out here, man? Any final thoughts, comments for anybody out there listening?
Yeah, I mean, just to plug you guys a little bit more,
keep going, dude. Yeah, you got the flow, buddy.
You guys, you're putting out great information. I should say you're teaching great lessons, but subscribe to your email list too. There's always opportunities. If you're somebody who's sitting on the sideline thinking I can never get into real estate, there's always a way. There's going to be a way. You just have to be willing to stick your neck out a little bit and put in some work. And if it's, the option between, you say in 20 years, do I want to be sitting in an office doing something working for another guy that I don't want to be doing? Or maybe in 20 years, I'll be sitting on a beach doing a little bit of work for a guy or for the lady sitting next to me,
there
she's
the boss
go. With you. So
yeah.
Yeah.
I love that, dude.
Try. Get out there. If you're not sure, I'm happy to answer questions or help anybody who's coming up and looking for ideas too. So
perfect. Ben, what's the best way if somebody wanted to reach out to you, email you, contact? What's the best way to get a hold of you if they wanted to connect up with you, Ben?
I've got a little bit. I'm starting to make some content too. I'm still pretty rough in the game on that, but I've got a VA and that helps me make a little bit of that stuff nicer than it is. But I think like on Instagram, I'm at Cheers LB, Cheers LB, pretty much Cheers Little Buddy. Same thing on YouTube, Cheers LB. Or you can just email me, Ben at doorbps.com is probably the easiest there. So
awesome,
if you got questions, if I can help, I'm happy to help. I want to make more content to help people learn the trades, get into investing too. So
awesome, buddy. Well, we'll put all those in the show notes as well. So we'll get the Instagram and the YouTube and your email in there. So if anybody wants to connect up, just hit the show notes here and get connected up with Ben. And Ben, final question: favorite place to visit in Wisconsin or Wisconsin tradition?
Man, it's fish fry in Milwaukee is probably one of the top ones, right? You go down and catch a fish fry, catch a brewery tour, catch a game, bucks, brewers, any sort of fun there. That's always a great trip. So
nice, love it, man. I love it. Well, dude, I appreciate you being on. This is a ton of information. I think people need to go back and re-listen to this one a couple times because there's a lot in here for you guys out there. So if you guys got value out of this, get in that YouTube contest, share this thing, subscribe, comment on the Instagram, and follow us there as well. And we will see you guys on the next episode.